The company announcing last week that it's closed this takeover bid for South Africa's Freeworld Coatings. You've now acquired approximately 90% of the outstanding stock. That acquisition hardly having any impact on your rating. What's the impact that you see it having on the business's growth moving forward?
We've always seen Freeworld as a strategic initiative for us. We've always seen Freeworld as a platform of growth for us. We've always seen Freeworld as an expansion strategy for us in Africa, because this is one area we're not present in right now. And as you said, we're very happy to see the support given to us by the Freeworld shareholders. And we feel that this will allow us an opportunity, allow Kansai, a global manufacturing coatings company, an opportunity to work with a world-class company in name of Freeworld and allow the two together to expand and establish themselves as a regional entity in Africa.
So effectively, where we've got the numbers reflecting that the acquisition is going to be totaling approximately 1.8 billion rand, that's ultimately the price tag you're paying for access to the rest of the continent.
We are abiding by the policy of the South African government. They see South Africa as a gateway to Africa. And that is a policy which attracted us to look at Africa as a possible area where we're not present in at all. And once that policy was there on behalf of the government, we looked at company, Freeworld, which would give us that impotence to grow in Africa.
So how's this deal looking to be financed?
This deal will be financed through a combination of cash and credit facilities offered to us by our finances. If
the company uses cash on hand to pay for some of these acquisition costs, I mean, we should see some deterioration in your debt equity structure. Run us through, your earning and cash flow generating capacities and what any deterioration of that debt equity actually means for the business.
For us, Freeworld is a strategic initiative. We've always looked at opportunities provided to the company to invest in areas where there's possible areas for growth. And again, Africa is an area where we see a lot of growth coming from. And our company's financials are in a position to give us that impotence, to give us that leeway, to invest in companies which we feel will give us that growth in areas we're not present in right now.
Of course, while we talk about all of this, the antitrust authority is the condition for the actual completion of this transaction. It's pretty much a done deal, or are you still anxious and nervous that things could swing the other way?
Yes, the Competition Commission is one pending condition, but we're very happy and very comfortable going forward, because not only do we see comfort in the Competition Commission, the shareholders' support also gives us the comfort that going forward this is a transaction which will be effectively fulfilled. I mean, do remember the shareholders are representatives of financial institutions, and they have done their homework going forward and working with us. So their overwhelming support is a big source of comfort for us.
From your perspective, why shouldn't this transaction be a competition concern?
We believe that this is a vertical merger, where Kansai is the provider of technology and Freeworld will be the manufacturer of technology. And vertical integration always is pro-competitiveness. They always enhance competitiveness in the market because there's another player who's coming into the market in tandem with the existing players. So for us, we see this as a pro-competitive merger happening in the market, which will not only benefit the shareholders, but also the employees of the company, who would be very happy to see a global company coming and partnering with them.
Oh, of course, you've been speaking about the strategic essence of this transaction from a synergy point of view, because success of a strategy like this ultimately depends on synergy down the line. How are you rating synergy between the two companies right now?
The first one is, of course, geographical synergy, because this is an area where we're not present in right now. So, of course, that provides a lot of room, a lot of maneuver for Freeworld to grow with us and to expand with us and for us to enrich its people. So geographically, it's a perfect fit. And of course, we see Africa as posing a lot of opportunities for us, a lot of potential for us. So for us, this was mostly looking at opportunities in areas where we're not present in currently.
Well, you make it sound pretty smooth sailing, the road ahead. What are some of the major challenges you are anticipating, if any?
Of course, with such integrations, you have to be very careful in how you go ahead and integrate the two companies and you manage the two companies. But I think what we have seen so far and going forward, we are very comfortable in the way the things have happened. And we're very happy and looking forward to support of the employees. And I'm happy to say we have had a lot of support from the government. When we met with them, they're very anxious and very happy to see foreign investment coming in. South Africa is becoming a leading economy in the developing nations now. And what better indicator of that than to see foreign investment coming in?
And maintaining that the listing of Freeworld on the JSE will be retained.
We're happy to remain listed at the at JSE, and we'll be engaging with future stakeholders to see how best to manage that in the future.